All right, we're back. Welcome back, everyone. It's been a very exciting last few days and last week. Amazing. Hope that many of you are new here, most likely from the Bootcamp Trading Weeks. I would like to welcome you all to the 5ers Live Trading Room here for another beautiful week with insane volatility. How you doing, Victor? You're in a new place every day nowadays.
I am. Hello, everyone. How are you doing, Jonathan, and everyone watching us? I mean, isn't it exciting to be a trader? I mean, look at I not only talking about the bootcamp trading week we just had, which was a lot of fun and so exciting. But look at the volatility, as you mentioned. Look at the crypto
Yeah.
market, the election we had, and the
Wow.
Fed's decision. I mean, this is so much fun to be a trader.
This is the face, the one here next to me, right here. This is the face of making money, and like this is you can see the change in character that we always talk about the behavior of the trends, but look at the change in behavior of us when when traders get volatility, we make money. It's like that's just the way it is. When the markets are volatile, we make money, and for me, it doesn't really matter if the market goes up or down. I'm still going to be making money because with enough volatility, you'll be able to get stopped out and then just reverse your position and still make money. And that's the beauty of trading in volatile markets, really. So last week we had the pre-recorded session where I talked about system development and back testing. So, and a lot of you requested the access to the back testing template, and the back testing template is right now in the description of this video. So please go there, click that link, and it will take you to a Google Sheet, not Google Sheet, Google. I think it's Google Sheet. Yeah, Google Sheet. Where you have to make a copy, and we'll go through that. Okay, we'll go through that. But what I want to do first is I want to show you some of the positions that I have open right now, and it's been a long time since I've been able to take swing trades like the ones I'm going to show you here, where I'm also able to add to my positions. You guys been, if you've been here for a while, if you've been following for a while, the last couple of months were honestly, I haven't seen a lot of volatility as a swing trader in the way that I want to trade the markets. I've approached it in a way where I'm taking profits earlier, with a negative risk to reward ratio, which has worked well, but I'm really missing the big moves as a swing trade. I'm missing the multiple all trades where you have a big move developing over the course of a few days and maybe even a few weeks, so that you have the opportunity as a swing trader to add to your positions as well. And that's something I've done now for the first time in several months, being able to add to the current positions that I have open. And I want to walk you through a type of analysis here that is laying the foundation for the trades here. I see we have a lot of questions on the event account as well. You will receive an email to the email that you signed up for the bootcamp week. I'm not sure if that email has been sent out yet, but it's going to get sent out. You will receive a link to get that bootcamp account for $10. So make sure you check your email account. Make sure you look at the spam folder and the everything. So as you can see here, I have a short trade on the euro dollar, the euro USD. I also have a short trade. Henry says I got the email, so obviously they are sending out the email, so you got the email. I also have a short idea on GBP USD here, which is based on a breakup structure. Same with EU, based on a breakup structure, but it's also based on a other foundational underlying idea that I have here. And this is an idea based on Donald Trump winning the US presidential elections. What I did was I went back and I looked at what happened in 2016 when it was obvious that he was going to win over Hillary Clinton. So what happened back then, and how can we potentially see signs of that repeating again? So before I go into that, I want to make sure that you understand the relationship between the US dollar and risk assets. Okay, so risk assets is, for example, Bitcoin or stocks, and things that, so a scenario where you want to invest or buy risk assets is a scenario where it's a relatively calm macroeconomic, geopolitical. People are thinking that either it's going to remain calm or it's going to get better. There's a less risk in the global markets, and they think that stocks will be performing well, and they think that Bitcoin and other risk assets will perform well and move to the upside. That is a risk on environment. In a risk on environment, you will usually see safe haven assets perform poorly because, of course, safe haven assets is asset that you put your money in when you're no longer ready to put it into risk assets, and that creates a risk off scenario. Now, if you look at the US dollar is a typical safe haven asset. People move their cash into US dollar in times of uncertainty when it's a risk off environment. But what happens if the dollar gains strength while we're in a risk on environment? That doesn't make a lot of sense, right? But it does make sense when Donald Trump gets elected. Let's take a look at the dollar currency index for 2016. Okay. This is a chart where you see the dollar currency index in blue, and you see the SPX or the S&P 500 equity index in what color is this, Victor?
I don't know. I see it like red, but I think it's a little more. I'm not sure.
Well, I want to make it red because it's that not, and now it looks like it's orange.
Mm,
That's red. I'm
it is
most
red.
likely
It is. Yeah,
yeah, it's
it
red.
looks like red.
Most likely colorblind. Welcome to the 5ers live stream where we are not certified eye doctors. It's just that if you are, then please help me out with correcting my color blindness. Anyway, so what we see here is at the time when in October, we started to see a correlation between the dollar currency index and the S&P 500. At the time of election, when the results came out, when it was obvious, this is the November the 4th, and then we have November the 7th here. This is on a daily chart, so this is over the weekend, obviously. But here, on Friday, November the 4th, obviously, it became obvious that Donald Trump was winning over Hillary Clinton. Dollar currency index, meaning the strength of the dollar. And by the way, remember that the dollar currency index is a basket of currencies weighted against the dollar to show the strength of the dollar. About 57 or 60% of these is the euro dollar, the euro USD. And that's important to remember because that's based on my trading, right? So we see a correlation between the dollar currency index and the S&P 500. And this correlation breaks at around inauguration. So the election result, and then Trump comes into power, and that correlation breaks. Now, let me show you what that looks like to really show you the ordinary correlation between the dollar currency index and the S&P 500. This is what it looks like, okay? You have the dollar currency index, and then you have the S&P 500. It's just, an obvious negative correlation, an inverse correlation. But between the time of the election results and inauguration, you have a positive correlation between the S&P 500 and the dollar currency index. So what happens if USD goes up? Well, if USD goes up, your USD should go down, right? And if you look at the economy of Europe, look at Germany. Germany is not doing well, and the elections are coming up in Germany, and it's very important that they bring forth a economic plan that helps the growth of the German economy, and that is a big part of the eurozone, the euro economy. And also then we have a new government in the UK, which seems as though they're lacking in economic expertise, for lack of better words. The UK economy is not doing well, but the US economy is, people are expecting the US economy to do very well. So we see a positive correlation here between S&P 500 and the dollar currency index. I believe that the same relationship is going to repeat itself this time around. This is elections. You see that it began the same, with both of them moving down in correlation with each other and then up. So this correlation is true today. And now, if we do look at then the general idea, and I do think there's a mix of things here that comes into play here. I think that people are actually expecting Trump to come in and help create a strong U.S. economy. He's also come in to perhaps create a more stable geopolitical, believe it or not, but I think people are expecting him to create a more stable geopolitical landscape, which and with the tariffs that he's talking about for the USD, that's going to strengthen the American economy, and it could potentially also strengthen the overall risk appetite around the world. But then remember what happens after inauguration. After inauguration, you usually see a decline in the strength of the dollar. So for the next few months, I'm betting on the risk on to continue and the US dollar to continue to the upside. So if you go to the dollar currency index chart, now this is, as you know, this is the comparison between dollar currency index and the S&P 500. But if you go to the US dollar currency index for a candlestick chart, and we'll look at this from a trading perspective as a technical analyst, we are seeing the dollar currency index in a range right here with a reclaim of the range EQ. Now remember, we talked about this quite a lot in the trading room here, that if we reclaim the range EQ, next stop is most likely going to be the range high. If we break the range highs for the dollar currency index, we are going to see some insane moves in the market. Now, I expect the dollar currency index to enter resistance here. So I think this level will be resistance. And if we then take this trading idea and we move it over into tradable assets like the Euro USD, we can look at the trade idea in this light. So this is the idea on the euro dollar, the Euro USD, where we have different setups here. No, this is the wrong one. This is dollar currency index charts. So different layouts here. So I got to go back to, obviously I have to go back to right chart here. So this is the Euro USD chart. As we can see, applying basic technical analysis, like I've taught you guys in the Monday live stream from last week, applying very simple technical analysis with looking at the overall primary trend. So what is the overall primary trend for EU? Well, we could argue that it's broken significant support, it's created a lower high, and it's just simply quite bearish. And this goes hand in hand with the strength of the dollar and the weakness of the Eurozone, and specifically the economy in Germany. Now, if we go out to the monthly, what I've done here is, and I'm actually going to show you what I have here. I'm going to show you that later, but let's focus on this right now. Zooming all the way out to the monthly, we see right here, we see a untested level on the monthly. This is an actual untested level. If you go into the lower time frames, you'll see that this is actually an untested level as well. And that level aligns perfectly with the 0.618. If you put the Fib anchor high at the low here and the high here. So I believe that euro dollar might actually come down to parity, which means $1 for 1 euro, or 1 euro for $1, whatever that exchange rate is. I think it's going to come down to that level, but I will take profit at 1.02 if it comes to that. Now, this idea is confirmed, right? You have on the 4 hour a break and retest of this level right here. I entered based on that 4 hour bearish engulfing candle, and the idea is confirmed. So what I've done here is this morning I moved my stops, and now this is important, guys. Pay attention to this, because this is the basics of risk management, and it's very, very important if you're going to be looking at scaling into positions and adding to your winners. Because remember, you want to be adding to your winners in a way that you're not adding unnecessary risk. That's super important, because otherwise you're just going to be risking more. So what I did was I moved my original stop loss. This is the stop loss right here. I moved it here. So I'm only going to be risking this amount of pips on that setup. And then when I did that, EU was trading here. So what I did was I took the risk that I removed here and I put it on that trade, meaning if the stop loss on this position and that position gets hit, I will lose no more than I risked on that trade. But if TP gets hit, I will obviously be making more money. So I'm risking the same amount of money, but I'm going to make more money. Okay, going back to GBP USD. I'm looking at something similar here for GBP USD, but because of the fact that we have such a strong support level here, I'm not willing to let this trade run, down to this level. And I did the exact same thing here. I lowered my stop loss on the original position, entered a new position here, and took what I added to this, what I took from this. So the risk is the same, but the profits will be bigger. Now, this is obviously two trade ideas, one on Euro USD and one on GBP USD, where I'm playing the dollar strength. Okay, now let's look at another pair, which is the AUD JPY. Now, this is typically a risk on Forex pair. When you're in a bull market, when you're in a bull market for equities, or a risk on, a global macroeconomic risk on scenario, AUD JPY most of the time is going to perform well. And I do see a good structure on AUD JPY with a massive move to the upside. I'm going to be looking at that as one move, big move to the downside, forming a massive double bottom right here. And that is now accumulation phase above that double bottom. And I'm expecting price to perhaps move up into this region. So that's going to be one of the risk on trades based on the same idea. Now we'll look at gold. Now gold is based on the same idea, because what happened for gold in 2016? Well, it absolutely dumped. And then it found the bottom about halfway from election to inauguration date. And if we look at the gold chart here, we have this curved trend line, and I'm just putting this on to show you the parabolic nature of the recent up move on gold. So we have this trend line, this curved trend line, showing you the parabolic nature of this move. And we also have a collection of parabolic trend lines right here. You have one trend line obviously going here, and then you have another trend line accelerating, accelerating, and accelerating until it breaks here. That should have been the first time where you looked at gold and say, okay, technically it's showing a lot of momentum, but it's going parabolic, and it's now broken the parabolic momentum trend. And what I'm seeing now is a possible head and shoulders patterns. Now this is, I'm actually seeing two head and shoulders, which is very interesting for gold. The first one is this one, where you have something like this, where it's not a symmetrical head and shoulders, but it looks, I'm seeing it like this. Okay, where you have left shoulder, right shoulder, head, and a ascending trend line right here. And that's also a valid way of looking at a head and shoulders. Now, of course, it's not the picture perfect head and shoulders that you're going to see in your textbook, but it's still the exact same thing that a head and shoulders show. Now, what's important as well on gold is what happens if you zoom in. Now, look at this. That could also be the same characteristics that you have with a head and shoulders. Again, it doesn't have to be perfect, but the overall motion of price action is the same, with a high, and then a lower high area with that breakdown. So you get this broke, retested the neckline of that trend line, neckline of that head and shoulders right there. So that's on gold. And now, of course, if we are going to see dollar strength and risk on strength at the same time, that should mean that risk assets continue to the upside. And when we talk about risk assets, obviously we need to talk about Bitcoin. And what is Bitcoin doing? It's
Man,
absolutely flying.
yeah. What is it doing?
Yeah, absolutely crazy. And by the way, guys, do you have any questions on anything that I've covered here today? Let me know in the comments if you do have any questions that you might want answered here in the live stream. We have a lot of people watching here, so I would like to take the opportunity to thank you all for joining and tell you all about our beautiful Discord community as well. If you're a member of the 5ers, if you have access to your hub account, you can gain access to the Discord server as well, where we're doing live streams on almost a daily basis, I believe. And Victor is one of those who are doing live streams in there. So definitely make sure you join the Discord as well. So before we move on to my analysis on crypto and a few altcoins that I have positions in based on this analysis as well, I'm just going to see if we do have any questions. And we are looking into this, by the way. We are looking into we have a lot of questions in the comments about the bootcamp account. We are looking into that right now. I see that Victor has already messaged someone about that. So we are looking into that. Yeah, Discord is only for clients. If you have an account or had an account, then you can gain access to Discord. What's your entry strategy, Mr. Jonatan? Yeah, let me start that comment. Let's save that one, and we'll come back to that later.
For everyone who is wondering, it has been addressed already in the chat, but indeed, for the bootcamp account that is offered as the bootcamp trading week, that's going to be it is a 20K account, but it starts as a 5K on phase 1, 10K on phase 2, and 15K on phase 3. So the 20K is when you're funded. Just for everyone who was wondering why they have a 5K account while they were thinking it's a 20K. Yes, it is a 20K account, but that's when you get funded.
Yeah, that's right. So I'm seeing comments that you're not able to pay with crypto. I'm not sure if that's an option. I haven't looked at the actual checkout pays. I do not know if it's possible to pay with crypto. And if you can't pay with crypto, then it's probably not possible. But I will look into seeing if that is an option and if I can get that done over the course of the live stream, or if we have to take care of those questions in tomorrow's live stream. But I want to talk a little bit about Bitcoin here. Now, I don't know if you guys remember, but as you guys know, I'm a long-term Bitcoin trader, long-term holder of Bitcoin, and I've been very vocal about the pending bull market for crypto. I've already went through several cycles in Bitcoin. I've been able to time the bottom and time the top on Bitcoin, and I do have my general entry for Bitcoin being in the 20K region down here, and I'm still holding that position. And I've one of the few times that I've added to that position was when the German government started selling Bitcoin and then buying back Bitcoin. And I remember having a live stream then and saying, like, this is probably going to be your last time to buy. And on that week when the German government sold Bitcoin, we went straight into the reload zone. We dipped below the 0.618, hit the 0.702 perfectly here around 51K, hit that support. And I said, if you're looking to accumulate Bitcoin in this uptrend, then this is probably a very good option to do so. This is that's the position that I'm still holding. And we have the inauguration date being the 20th of January here. And I do think that we're going to see some type of dip around that time. But before that happens, I do believe that we're going to hit that 100K region for Bitcoin and hit the upper band of the buy zone for the Bitcoin logarithmic regression chart indicator, which is this one right here. Now, I want to move your attention to the lower part of the screen here as well, where we have the MVRVC score indicator, which is now with price. Obviously, you can see almost like a bull flag pattern here with that up move and this right here, or it could also be a descending wedge, but you have that breakout right here. And same thing obviously happening with the MVRVC score here breaking higher, potentially reaching the target of the sell zone. I think though that 100K will be hit before MVRVC score enters the sell zone. I do suspect that Bitcoin is we're gonna see a pretty big retrace when Bitcoin hits that 100K region, but eventually break through and hit the area around 160K, and that is where I believe that the MVRVC score will enter the sell zone, and that is when I exit this cycle. Which means if we hit that area, we've been able to ride this for about 650%, which is quite good, especially
Quite
with my
good.
leverage. Quite good.
Quite good.
Especially with my leverage position. But
Don't,
with
don't be so modest, Jonathan.
that's pretty amazing. But this time around, I'm going to do something that I haven't done successfully in previous cycles, and that is I'm going to exit everything and I'm going to start building a short position. And now I want to take you back to EURUSD because I had a drawing here on EURUSD that I want to talk to you guys about. It's, this one here. Now, what we're seeing right now is we see a lot of people on social media talk about Bitcoin, talk about the bull market. Now, just remember that Bitcoin has been in a bull market for, let's see, because I view the breakout above 31 as the true start of the bull market, which means we've been in the bull market for over a year already. Okay, so remember this. Bitcoin has been in the bull market for a year already. It's not entering a bull market now. We've like halfway through the bull market already. That's important to take into account. So if you're entering the Bitcoin market now, you're late, okay? You're entering in the public participation phase, okay? Now, talking in terms of Dow Jones and Charles Dow, the founder of modern technical analysis, like I talked about on Monday, this is where, as he calls it, the knowledgeable investors calls it. Now, today, you're probably going to call it smart money, okay, with smart money concept and all of that. But this here is where the smart money enters. And it's not about institutional investors only. It's about the knowledgeable investors. Now, who are the knowledgeable investors? Well, that's people like me, people like Victor, people like Alex, people like Saul, who's been in the markets for a very long time, and we know price action. That's the knowledgeable investors. Now, of course, at institutions, you will have knowledgeable investors doing the technical analysis for the big institutional money flow and smart money as well. People that are not doing technical analysis as a profession, like me and Victor is doing, they will enter when everyone else enters, okay? Because they don't have the conviction to enter in a fearful market. Because, you know, this is a fearful market right here. Smart money enters when no one else wants to enter because they understand that that's at the very bottom of a downtrend, or at the bottom of a bear market, you have max fear. At the top of a bull market, you have max euphoria. Okay, right now we're somewhere in the middle. We're somewhere in the middle of the public participation phase. So if what I want you guys to focus on when it comes to this bull market, to be able to time the top of this bull market. Because remember, guys, we are in a bull market right now. This bull market and the prosperity and the wealth that we're seeing right now, it will end, and we will go back to bear market. It's not a matter of if, it's a matter of when. And we want to be able to time that. We want to be able to sell at the top. And for me, that means selling at the top and also opening up a leveraged short position on Bitcoin to really make the most out of not only the uptrend, but also the downtrend. So we are here right now, the public participation phase. That's when you see the big accounts go out and say, like, take Andrew Tate, for example. He's on Twitter saying, like, that, I remember interacting with him quite a lot down here when he said, crypto is a scam. Bitcoin is a scam. Bitcoin is never going to go higher. Now, what is that guy doing now? Launching crypto coins, promoting products, saying that Bitcoin is the future of the economy. Like, that's the public participation phase. He's part of the public because he's not smart money. And that is most people. Okay, that's most people, especially celebrities. And I mean, remember in 2017, Katy Perry came out. She famously painted all her fingernails in different altcoins. That's the top. Couple of days later, boom, marked the absolute top. And that we're going to see the same thing now. When we enter the distribution range, there's going to be lots of euphoria. People are going to be making so much money. People that you did not know had a lot of money will be rolling up with a Lamborghini because he bought Bitcoin. And that will fuel even more people to get in because they want to buy that Lamborghini as well. You're going to have celebrities coming out endorsing Bitcoin, endorsing crypto. It's going to be crazy. You're going to be driving, you're going to be in the taxi, and your taxi driver is going to be trading Bitcoin on 100 times leverage on the Tesla screen that he's driving, like that's the time when you're going to think, but I'm serious though. Like, you're going to have that. You're going to see that, right? And the public thinks that, all right, it's on the media. Celebrities are endorsing Bitcoin. Now I have to enter, right? Because now I have to enter because everyone else is entering. Everyone else is making money on this. So I have to enter. This is where, now remember, people, smart money, the big institutional players, they need liquidity. Where do they get liquidity from? They get liquidity from the public that enters in the public participation phase. They get the liquidity from the euphoria because some people are still going to be buying up here. And the people that buy are just exit liquidity for the people that bought down here. Okay, so when you see that everyone loves Bitcoin, there's nothing wrong with Bitcoin. The world is going to be a better place because of Bitcoin if only prices continues to 100 trillion. That's when you sell. Okay, now there's a few technical aspects of this as well. You can look at something very simple as perhaps the 50 EMA on the weekly, okay, that we have not broken since the beginning of this bull market. If you see a weekly candle close below the weekly 50 EMA, that's probably a good sign to exit. You can also look at a daily break of structure and a break below important daily support while price breaks below the daily 50 EMA. So something like this, perhaps. You see that price is reaching at the very high. You see a blow off top, a big move to the upside, a blow off top, and then you form maybe something like this. I mean, if you exit here, you'll still be making a lot of money. Yes, you're down like 50% of your position from the highs, 50% from the highs, but you're still going to be able to get a pretty good entry. And this is some of the patterns that I'm looking at: a head and shoulders, a break of structure, whatever, with breaking important EMAs and support, while of course also the MVRVC score is in the sell zone, and you have max euphoria. But to be honest, euphoria is using sentiment and as euphoria and fear is gonna enable you to time the top much more simpler than technical analysis. Okay, much more simpler. You just look at sentiment, and that's it. Now, people can be forward for quite a long time, but as long as Bitcoin is in a daily uptrend, they can be as euphoric as they want. But there's a point where the daily structure breaks, and people will still be euphoric. People will still say that we're hodlers, we're holding this because price will recover. They're in a state of denial, and that euphoria plus denial is the recipe for disaster when it comes to trading. Okay, so that's my overall outlook on crypto, but I'm not done. I'm not done.
Very
Uh,
extensive, very extensive. Yeah, I think you're hitting the nail on its head when people on the street are talking about people who are not traders, who are not investors, who are not financially sophisticated. When they are talking about Bitcoin, or your grandmother is asking you, how can I participate in Bitcoin as well? We are in that phase. That's not supposed to be like that. So if everyone is talking about Bitcoin, that's a good warning sign to start getting out.
yeah, look at gold. Wow, nice. I'm gonna be adding to this position most likely. That is exactly the drop that I wanted to see. Wow, that is beautiful. That is beautiful. Oh, it's been a while. I got like 6 positions open and they're all in profit. Okay, so let's look at altcoins. Okay, we're gonna look at altcoins. Now we're gonna do some crypto analysis here with looking at altcoins as well. Okay, so we're gonna be looking at Bitcoin versus the crypto market cap, excluding the top 10 right here, just to show you guys that I believe that the altcoin market is severely lagging behind right here. You have the exact same structure, but you have much more upside potential on the market cap for the crypto market, the altcoin market, compared to Bitcoin. It's lagging behind, right? And I think we're gonna see a huge push to the upside here for the altcoin market, and I'm of course positioned accordingly, and I will show you those positions. Another chart that I think it's important to look at is the altcoin dominance. Now, what is the altcoin dominance? Basically, what it means is that, let me see what others the is. Okay, so this is the
Be,
market
be,
cap. This
be,
is the dominant.
Before
Yeah,
you continue, Jonathan, you said something. I think the people in the audience might be wondering. You said that the altcoins they have a lag, right? When Bitcoin moves, they move, but with a delay. How
yeah.
much of a delay are you thinking? Are we like, do people who are want to participate in the altcoin rally? Do they have to wait for the top of Bitcoin, or do they, you know, just get in right now because they're it's gonna come up soon? Or what are we talking about in terms of the length of this delay, in your opinion?
It's obviously very difficult to answer to. I mean, it could be days, could be weeks, but I'd say on in general, I'd say it's about a week delay between. But you have it kind of trickles down. You have Bitcoin moves, and then the top altcoin moves, and then so you have large cap, mid caps, and low caps. So you have Bitcoin being the king, and then you have large caps being like XRP, Ethereum, Cardano, things like that. And then you have mid cap, like maybe, I don't know, FTM or things like that. And then you have like shit coins, meme coins. And it kind of, they move with first Bitcoin, then you have um, large caps, mid caps, and small caps. It's kind of like that. And yeah, I think that's
But basically, what you're saying is between and probably in terms of weeks, right? Um, that they will each step will take from Bitcoin and then to the large caps crypto coins, correct?
yeah. Well, I think it's it's very
Or it's not
easy
even,
to it's very
or
easy
is
to
it?
look at that. I
Go
mean,
ahead.
we can look at we can look at that later and compare the movements, of course. But I wanted to just address this. We see that the altcoin dominance here is at excluding the top 10 is at 9%, 9.5%, which means that 9.5% of the market cap is in altcoins, excluding the top 10, which includes Bitcoin and Ethereum. But we're at a support here, so there's obviously a lot of upside for altcoin dominance. If we look at total 3, this is a chart that gives us the market cap of the crypto market, excluding the top 3, which in this case, I believe is Bitcoin, Ethereum, and perhaps XRP, maybe even Dodge, I don't know, but the third biggest one. And here you can see that at the top of 2021, we actually reached a market cap of above 1 trillion, and currently we're at 724 trillion. So the market cap for the altcoin market is just getting started, and we're reaching this resistance right now. And I do expect a potential retrace here. But once this level is broken, it's like we're going to be opening the floodgates. It's going to be insane. And I believe that I found 2 solid, good altcoins that I think will perform quite well in this scenario. And that is FTM and Link. So we can look at, and I've had positions in FTM and Link for quite some time, but I've added to them in the last couple of days and over the weekend. And we can look at Link here, and this is traded based on the weekly chart. So this is this position. I have maxed leverage to what this stop loss allows me to have, which is basically 2 times leverage, because it then becomes a 100% stop loss basically. So a Link here, I'm looking for about a 3 R trade here. I'm basically looking for a Link to with the crypto market cap break to the upside and reach the area where we put in a high around 2021. And then we have FTM, which is basically a similar structure where I've added to this one for like a 2.5 R trade. And those are the 2 altcoins that I think looks quite ready for a move. And then there's, of course, lots of other altcoins out there. We could look at BNB, for example. I think BNB is very strong in this market. Yeah, so this is one of those coins where we're close to all-time highs, where I think, well, maybe it's not all-time highs. I can't remember what this did in 2007. Did we even have that in 2007? Well, this is Binance. Maybe it launched in November 2017. That's right. So it's actually at all-time highs here. And this is one of those altcoins that once broken into new all-time highs, this has insane upside potential. Really insane upside potential. There's just no stopping something like this when it reaches into new all-time highs. I mean, it's almost like Bitcoin. Do we have any questions on this? Anything that we covered today?
I didn't see any any questions yet. So for everyone who's watching and you're wondering, you have a question, a burning question we haven't addressed, let us know. Jonatan is ready here. He's the crypto guy, so you have a great chance, great opportunity here to tap into the mind of someone who has been in different cycle of the crypto market and is able to guide us through it, give us his insights, of course. So
let's take a look at this one. We got the TAO.
I'm not familiar with those names.
Well, FET, I know. FET is an AI product, I believe. It's quite known in the crypto space. The other ones are obviously newer. And looking at this one, TAO or TAO, I believe that we're looking at something that has It's at the highs. So something like this, I would much rather. I think like the best opportunity for this one is gone, and I'm only really interested in altcoins that are trading down here. That has lots of upside potential. Now, of course, you look at this and you might say, well, obviously, okay, Tau is an AI product as well, and I guess everything here on this list is AI products. And yeah, they're all
Most
AI. Okay,
likely.
so I think, yeah, I mean, AI is a good play. I mean, AI, honestly, like AI, I don't care what it does. I don't care, as long as it has AI in the name, it's gonna make you money. I'm not kidding. It's the hype right now. It's most likely going to be the hype for the next 12 or 24 months. So yeah, AI altcoins probably going to do well. But I want to find an AI altcoin that is at support and not at resistance. So let's look at TIA. Not this looks better. This looks much better. If this product has potential, which looking at the chart, it looks like it doesn't have any potential, if I'm going to be honest with you. Because if something cannot perform, if an altcoin cannot perform in this environment, then it's just an absolute shit product. Okay, this is a shit coin. This is something that I would absolutely not invest in. We can look at it, see if we have more data here on something else. Yeah, so it looks like it got listed here. Yeah, this is the chart tells me that this is a like almost like a pump and dump. It got listed, had a pump, and now it's dumping. Obviously, not what I want to see. Now, however, look at FET with the widget fetch.ai. Now, this is most likely going to look much different because this is an actual good product. Yeah. Now you see, it got quite a lot of history, and it has already had that insane pump. Now remember, the TAO was also present during this pump, which we didn't see any of that, right?
Mm-hmm.
Now this to me looks better, much better, and we can even chart this on a monthly time frame and find the structure. So we put the fibs on here, and yeah, from a monthly perspective, this looks. I mean, this looks beautiful right here. We can even put something on like that. This looks great. So this on a monthly, break and read this on a monthly, very, very good price action on the monthly, very strong on the weekly, very, very good break of structure, putting in the bottom formation here on the weekly. On the daily, yeah, I mean this is good. I like this. And I'm thinking that it very well might go up to $3, and we're talking about a 100% move to the upside. So yeah, if this truly is a good bull market coming for altcoins, then bet is definitely looking good like that. You know, the title of today's live stream is why top traders use this tool and free backtesting template, and the backtesting template is in the description of the yeah, sorry about that. I had to just read the comments. Yeah, so we I wanted to do a also webinar focused a little bit about on using the backtesting template that we have, and working on developing some strategies. So what I've talked about now in the first hour of this live stream, I'm going to cover in more detail on either tomorrow or on Wednesday. But I am of course going to break this down for you guys, and have you follow the process of the trades here live every day. And what we're seeing right now for EU is we're obviously continuing lower. We got gold breaking down even more. We have the 4 hour looking beautiful right here. I might actually be yeah, because it broke that low. I'm gonna go into MetaTrader. I'm gonna move and adjust the stop loss on gold here. Gonna be you start by moving it down here. I'm not gonna add to the position just yet, but I will most likely add on the next break lower and have it for a like a one to one risk to reward. But the interesting part, interesting fact is if I add a new position with one to one risk to reward, I'm turning this 1.5 R trade into a 2.5 with the same risk as I would have risked for a this 1.5, which is, I think, when you have conviction in your ideas and you see confirmation of those ideas, you want to be adding to those positions, especially as a swing trader, because I think that is where the true strength of a swing trader comes from, his ability to add to winning positions where there's confidence in doing so. As a intraday, there's this conversation going on social media right now. Who's more profitable? A day trader or a swing trader? And I think it's a rather interesting discussion. And Victor, what do you think? What do you think? Who's more profitable?
I mean, I, I don't think you can say, you can generalize here, because it all depends on the edge of the system. Of course, the day trader has a higher frequency in opportunity, and so if two systems on expectancy basis, right, so on per trade basis, are equally uh, profitable, the day trader will win, because the day trader will have more more opportunities more often. However, the thing is, the swing trader typically, when they win a lot. So they 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 would have a higher expectancy just with a lower frequency. So, and that balance is what makes the difference, and it depends on the system. I don't think you can even say that one style is going to be more profitable than not. What I do like to say is that the swing trader, because you have to be not more selective, but the time frame is higher, so you're not going to be making that many mistakes. And compared to a day trader, if you are, let's say, you're not reading the market well, you can do yourself a lot more the harm compared to a swing trader. So yes, you can win a lot because you have more opportunity, but the same thing, you're going to have a much more volatility in your equity graph, because when you're not doing it right, you're going to be losing more on a comparable base, trade by trade against trade basis, right? Compare with apples, you're going to be losing more, I would expect. So I don't think you can even say one is better than the other one in terms of profitability.
No, I think I have to agree with you, and I probably think day trading is more profitable. It's when you're if day trading is done right, I think it's going to be more profitable. But there's this podcast out with a gentleman, I can't remember his name, but a long-term pro trader from the UK, saying that he from all the statistics he've looked at and everything, he said that he knows that swing trading is more profitable because of the fact that you can add to winning positions in a whole different way over a longer time period that you're not able to do when trading lower time frames. But I don't really believe that. I think day trading, if day trading is done right, it's going to be more, it's going to be the most profitable way of trading. The problem is day trading is, especially trading the lower time frames and be consistent long term, it's so incredibly difficult. I think very few people are able to, because you need to
Yeah.
do it discretionary. If you're going to do it long term, you need to do it discretionary, because it's going to be very difficult to have a systematic approach for 10 years trading the same system as an intraday trader. That's just going to be very, very difficult. I think you have to adopt the system quite often, and that's the same with swing trading. But with swing trading, you have the time to adopt. That's what I'm saying. Like, you have the time.
I would say because of the fractal nature. Now you're mentioning this. Now, because of the fractal nature of the market, the lower the time frame you go, if you have the equal expectancy, more profitable you would be, right? So that would favor the day trader above the swing trader. But uh, it's the difficulty level is much higher. And that's why I think it's difficult to say, because the swing trader has the benefit of, not having to make that many decisions. And as a trader, the more decisions you have to make, the more difficult it is for you to have most of them, if not needing all of them to be right. You don't have to do that with the swing trade, because there are not that many decisions to be taken in the same period compared to a day trader. Instead, compared to a day trader, might be, taking multiple trades per day, and you better be on spot on with all those decisions for you to actually capture and extract the edge. So it is more difficult, I would say, with a day trader. But then you have more chance to be more profitable compared to a swing trader. So it's where your strength lies as a trader.
Yeah, definitely. No, I agree with that. You know what? Let's take a 10-minute break, and then when we're back, we're gonna be looking at. I'm gonna be probably adding to my position here on gold, and
Before
yeah,
Yeah, before we, well, I'm not sure before we go, but we can visit the altcoin CRO or Chrono,
yeah.
maybe when we come back, and I can talk a little bit about them. I think I can share a little thing that can be useful for our audience.
Definitely. Okay, guys, while we have the break, make sure that you subscribe to the channel, like the video, and any questions that you have on system development and backtesting or anything else, let me know in the comments, and we will see you guys in 10 minutes. Take care.
Bye bye.
we are back. Welcome, everyone.
Yes, we
I'm
are. And we have someone in the chat posting the same messages. Guys, if you do this, you risk being banned or at least being your message being deleted because
yeah.
this is not desirable for the chat.
So I'm currently adding to my gold position here. Adding some risk. Let me see. Where do I have Meta Trader? Going to be opening it up.
And everyone else who was wondering or asking the question in the chat about buying the bootcamp account, if you have any questions, have any difficulties with the purchasing process, please check on the website. We have live support where they will guide you, help you with any issues you may have, whether that's buying on crypto, credit card, whatever it is. They are the right person to go to because they will be able to help you.
But I love the birds in the background. I wish I had some birds in the background as well.
Thank you.
Okay, so I've added to that gold position. I mean, it's clearly breaking down. I think we can look at the daily here, and to me, it's. I mean, of course, we can bounce here. There's definitely a chance that we will bounce here. The last daily swing is here, so there's of course a chance that we are going to bounce. But I think looking at the overall structure and the other ideas that I have open, I think it's fairly right now. I think the probabilities are to see a move to the downside on gold. I actually forgot that I lowered my risk on my main account, but I did not increase risk on my copy trader for my personal account, which means
Mm, you're
I'm probably taking,
under risking.
yeah, I'm probably under risking, which kind of sucks because that means I'll not be making a lot of money on these moves, which obviously quite big moves, you know. So I
Yeah.
mean, on EU, I'm in like almost 200 pip profit.
Wow. That's
Yeah.
awesome, man.
On GU, I'm on in 100 pip profit.
You're on fire, Jonathan.
Yeah, it's pretty good, man. Pretty good, but it's just very low profit on my personal account. But whatever, it is what it is. It's I guess rules are made to be broken, but not in trading though. Not in trading. Not in trading. Okay, so you wanted to take a look at CRO, right?
Yes, I am. We all know you are the crypto guy. But I'm only going to be talking about this one asset.
Yeah.
It is, of course. Let's look at it. I'm going to be showing my screen shortly. Let me get everything in place. And yes, this is my chart. Of course, you can see that CRO, which is for Chrono, which is a native coin for crypto.com, which is in this exchange, of course, a place where you can buy and cost custodian wallet. But the thing is, I'm only looking at the chart, and this is the reason why I was buying into it because it was technically so beautiful. The reaction is what it was getting was picture to me were picture perfect, right? Every time the first time it came into that order block, and yes, I'm talking about order block again because they work so nicely. We had the first reaction, and then we had another huge reaction with a nice engulfing there, and it kept on hitting it. And normally, the more times you get into the zone, the weaker the zone gets. But the timing of this was just perfect as it was getting squeezing this order block out. We got that election, and man, that is such a ride it has been on. Of course, if you are interested in this coin, you probably missed the boat on it on the short term. But there's more to it, because if you think about it, the of course, Chrono and Crypto.com isn't the biggest one out there, isn't as popular as Binance is. But if you look at the market cap of the Binance coin, it's much higher. It's at 88 billion, and the market cap on Chrono's coin is only almost four, a little less than four. So if you think about it, if they are going to be competing with the bigger one, they have a lot of room where they can still improve, and that would mean, of course, much higher prices for the coin, if everything else remains equal. So, on the longer term, I think there's a lot of profitability or a lot of potential to this coin. But it's such a great move it has made, and it's been making 20+% for the last couple of days. So you can imagine how volatile and how profitable this position has been. That's my take
Yeah, that's insane.
on that
That's
coin.
it's an
It's
insane move.
Yeah, and I think for the longer term, it's that market cap. I'm not gonna say, because I don't have that information. I don't have any projection how far they will get in market cap. But I mean, they if they can easily double, triple in market cap, and they're still not gonna be. There's so much room for them to catch up. They're only 3.9 billion compared to Binance, which is almost 90 billion. So there's a lot of room there for them to capture, share of the market, so to speak.
Yeah. No, I think you're definitely onto something there.
My By the way, my average price is around 8 cent, just for everyone who was just as this was my roughly above that order block, on that
Wow, that's a good entry.
daily time frame. Yeah. In other words, my that's more or less where I got in. Not That's not the moment, but that's my average price. I've been buying this for some time, but this is, of course, a nice trade, as so far.
Yeah, you've almost doubled your initial investment.
Yeah. Yes, I have.
Pretty cool. Right, so I want to go into take a look at this backtesting template. So in the description of this live stream, you will see a link to this backtesting template right here. And what you need to do first, you can see we got 10 people viewing the backtesting template right now. So what you need to do first is you need to click File right here, click File, and then make a copy, because you're not going to be able to edit this file, this template. You will have to first make a copy. So that's what I'm going to do. Sharing this new template with you all. I believe that this is now, yeah. So I've made a copy of this one right now. So what I wanted to do now is I want to walk you through how we can develop something with this template. But first, you obviously have to come up with some sort of idea. And I want to explore the possible idea of using let me. StreamYard here is not the best at switching between different, trading view and everything, but I want to perhaps explore the idea of doing some sort of breakout trading strategy. Or you know what? No, I want to try the Bollinger Bands. Okay, I want to try the Bollinger Bands. Let's do clean. Yeah, okay, so this one is good. Now I'm going to be showing you something in trading view here as well. You see on my main here, if I double click on the canvas here on the layout, you'll see that a lot of different indicators will come up. So if we double click here, all the indicators will disappear. You can also see that I have a lot of different indicators here. What I can do is I can go up to the indicator templates here, click indicator templates, and then save indicator template. That will save all the indicators that I have on as a specific indicator. And I will name this trading 5ers trading room layout. I'll save that. Now, when I go to this layout, you see that I have stochastics RSI here at the bottom and this EMA, but I want to go into templates and I'm going to click this one. I'll be adding all the indicators that I have on from the previous layout with the same settings and everything. So this is actually great if you're trading different systems and different markets and using different indicators and things. For that, you probably want to be using that. Here we have many different indicators on, and let's look at Euro NZD. And we have all these indicators on. I got the ADX up here as well. I'm playing around with that one. And we're going to be adding the Bollinger Bands. I'm going to be adding volume as well. And so the way you trade with the Bollinger Bands is this is sort of a mean reversal. You can trade this in different ways, but usually the way you trade using the Bollinger Bands is a mean reversal strategy where you have a moving average going in the middle, and then you have these lines up here and down here, and these are a specific standard deviation based on the moving average in the middle. The distance between the upper band and lower band is going to be the same with depending on the settings that you have on the Bollinger Bands, but usually the standard deviation is 1.5, I believe. Let's go into the settings and see what we have. So the standard deviation is 2 here. You can change around with this, but this is the standard settings and the standard deviation that we have on the Bollinger Bands. So if you're going to be trading this and perhaps create a trading system using the Bollinger Bands, we're going to be looking at let's look at the 15-minute. I think we have bigger moves, more interesting moves based on the Bollinger Bands on the 50-minute. You know what? Let's remove the volume for now. Let's remove the volume for now. And let's first decide what type of trading strategy we want to be trading here with the Bollinger Bands. I actually think using the Bollinger Bands and scalping can be quite effective, but I'm not sure I want to do that. I'm not seeing a lot of instances where the idea that I wanted to try is showing itself. So maybe it's not even worth trying. But the general idea that I wanted to try was like a reaction like this one here. Let me show you. So here you have price obviously testing the lower part of the Bollinger Bands. I think we can remove the ADX here. I also want to remove the RSI. If we have the MACD on here as well. So we got the MACD and we have the stochastics RSI. We hit the lower part of the Bollinger Bands here, and then the next candle will be a bullish engulfing candle. So what I'm thinking is seeing if there's any statistical probability or profitability with looking for bullish engulfing candles at the low of the Bollinger Bands and bearish engulfing candles at the high of the Bollinger Bands, and then either trade the move to middle the middle band or the high band of the Bollinger Bands. And I'm thinking from the low to the high, but I don't know if that's even a good idea, honestly. What do you think, Victor? You muted.
Yes, I just noticed that. Well, yes, the what you have to consider also with Bollinger Band is the expansion of the bands, right? Because it's a standard deviation. Typically, it's two, meaning that it 95% of the time it should keep price should keep within that band. And but the expansion of the width, right, the distance between the middle line and those standard deviation, if it is expanding, that is a expansion of that's a the volatility is going higher, right? It's becoming more, and that can also mean that could happen at a breakout. If that's the case, then that is something you don't want to be going against necessarily, right? Because it might be the beginning of a bigger move. If that is the case, then you don't want to be doing mean reversion. So I think if you're going to use Bollinger Band, you have to put it into context with the structure of price, because if it is at that point and it is breaking out, um, I wouldn't be doing that, because I would expect that if it were to break out, then it wouldn't be that as profitable, if maybe not at all. However, if you have a market that is ranging, and you're trying to doing a mean reversion on it, then it makes a lot of more sense. You don't have that breakout, and it's not expanding on the Bollinger Band, right? I think that's maybe a good filter. Is it expanding or not? And then you can do the mean reversion with much more, uh, of course, confidence, but we have to measure that. So one of the thing is, perhaps what we could do is, um, you're looking at euro dollar. Let's see. I don't see a on this is on the daily. I don't see a this is ranging to me, right? It has
Yeah.
equal. So I think that makes it a good candidate for a mean reversion trade. But of course, you need to, at least my way of doing it, which is much more objective. Well, I don't want to say much more objective, but I want to try to do it as objective as possible, and I want to standardize the width of the bands, right? Because if I'm gonna say it's not expanding, and I need to define what means not expanding. If it, and that one of the things you could do is you could measure for example, the slope of the bands, right? Is it the slope comparing the middle? I know it gets a little technical here, but the slope, the difference between the slope of the middle line and the slope of the Bollinger Bands, right? Because if they're not expanding, then there's not going to be any difference, right? You measure the degree visually, and you will get the same. But if it is expanding, then you'll have, of course, the bands will have a greater slope, upwards or downwards, compared to the middle line. It gets a little technical, I know, but then you can break it down to number. Let's say if the difference is more than, I'm gonna say just anything. If it's more than 20% degree or 10% degree, I don't know if that's a good number or not. Then you accept, you assume that it's expanding. And if it is expanding, then you don't want to be trading it, for example. And then you test only those that don't have that difference in the slope, the degree in slope. And because then you assume there's no change, not a marked change in volatility. In other words, it's more likely to go back to the mean.
Right. Okay, so I feel like that's not something that we're gonna be able to test now.
Yeah, no, yeah, that's not going to be something. It gets technical. You're gonna define, how to measure it. You gotta have a standardized way to measure it. But that's when I start thinking about, ways to capture this. I want to, you know, make it a tool that is selective. That is because if I'm going to be going to the mean reversion, I don't want to be in a trade that's not it's not likely. If it's a breakout and it's going to have a continuation, then it's not going to work, of course. But what you can do is you can do some exploration, right? Even if before studying, not studying, but before being so selective, what you can do is measure all the times that it gets to the, let's say, upper band, and you're trying to do that mean reversion. You can measure the deviation, right? The difference, the delta between the middle line slopes and the upper band, and then you automatically the data will tell you if that's something, if it has a predictive value or not, because that's actually the bottom line. Does it predict, the delta between the middle line and the upper line? Do they really matter or not for your profitability, right? That's the main question before you even try to use it as a filter. I know it gets a little bit technical, but I mean, it is what it is.
Yeah.
But if you're only for the process, for the learning process, the learning value of how to do the template, and I think that's the bottom line here, not
Yeah.
necessarily to go into the details, then we can just look for any touch of the Bollinger Band with the default settings, and then mark, let's say, 10 or 20, some number that is digestible for our stream, and then measure how many times does it get back to the middle line before a certain number. I don't know,
I
before.
think I think what we can try here first is let's just to how demonstrate how one can use the templates. We can do. Let me go back to the template here. I believe that this is the one. Yep. Okay. So we'll do confluence one is engulfing. So basically what I'm going to be trying is I'm going to be looking at the 1 minute, and I'll be looking at reactions at the top band or the lower Bollinger Bands. And we're going to be looking at engulfing candles. We're going to be looking at the stochastics RSI area, which means oversold or overbought. And then we're going to be looking at the stochastics RSI cross, which is a bull cross or a bear cross. And I'm going to be looking at the MACD. I want to know if the MACD is bullish or bearish. Basically, if we have a upwards trending MACD or a downwards trending MACD. And I also want to see look at the MACD histogram. See if there's any confluence with that. What else do we have? Let me move over to, so we got the stochastic location, stochastic cross, MACD trend, and then MACD histogram as well. I think we can start with that. So what I'm going to do is I'm simply going to move over from trading view to, so just see if we can find any example of this. So obviously I think we also want to apply some common sense here, and so let's assume that you're going to be trading this in a bit of a discretionary way, right? So you obviously you probably don't want to enter here because it feels like a big portion of the move has already happened. We want to see if we can ride it down to the lows, and I feel like a big part of this move has already happened. So we want to see if we can perhaps get a better entry. Let's see when it comes higher. Probably maybe this is let's just try this. Let's for the sake of the of how to use the template. Let's just say that we have a bearish engulfing candle. Let's put the stops above the band and then TP at the lower band. And we have on the, let's go into the stochastics RSI 80. Let's put it at 30 and 70. So if we go back to the template, what we have here first is, so of course, first I want to put in the date. That's important. That's going to be the first November 2024. And time is 15 past 8 in the morning, and it's on the Euro NCD. Now, of course, let's see if this is actually what the result of this trade is before we put in all the statistics. But I guess the thing here with trading this with Bollinger Bands is that TP is now gone, Obviously, we have the Bollinger Bands at a very different area right now. So, and that this is always the problem that I have with the Bollinger Bands is, it's just going to be now. This is going to be a very small trade because obviously then you want to exit at the lows right here.
Mm-hmm.
So whenever price hits the lows,
it's a little bit complicated because you have a dynamic TP.
Yeah, exactly. But then the stop loss should be dynamic as well, So, well, actually, so
once you enter, you can have a dynamic stop loss.
Exactly. So that's well, you can't have dynamic risk, but you can move the stop loss.
Yeah, I mean the stop loss can be dynamic, but I mean the risk is already on once you enter. So that's the complication. But you can still trade it, just knowing that you got to be moving the stop loss. So you're gonna have your R. When you your losses are gonna have an average, not one R.
Yeah.
As that's the only thing, which is still okay. It doesn't mean that's not a deal breaker.
No, definitely. Yeah, we're gonna have the giveaway link coming out shortly as well. So just want to show how this works. So we look at the trades. It had a engulfing candle, so that's where you want to put in you want to check that one for engulfing candle, and then we'll look at the stochastics RSI area. For the stochastics RSI area, you want the stochastics RSI to be above 70 at the time of entry. So that's where you have the candle. And I do believe that I would categorize this as being in the right area, and it also gives you a cross. So if you go back to the backtesting template, you have the stochastic RSI area, and you have a cross. And now we're going to go to the MACD. We want to see if MACD is trending down or if it's trending up. So we go to the MACD, and the MACD, and I'm gonna check the box if the trend on the MACD aligns with the entry, which most of the time it's probably not gonna do that because it's slower. But that's the entry candle, and you can see that MACD is still in an uptrend, and the histogram is still bullish. But then, interestingly enough, on the very next candle, you see a cross and a histogram. So I'm not going to mark this because it's not exactly what I want, because we don't know that this is happening when we're entering. So there's no confluence with the MACD. We have to mark that out. So on number 4, there's no confluence here. On number 5, there's no confluence with the histogram either. So the whole idea with trading or testing like this is you want to make sure that you basically you try to see if there's you find any confluence here. And the template can be found in the link in the description of this live stream. But you want to see if you can find any confluence. Now, I've tried doing this exact thing with the Bollinger Bands, and I didn't really have a lot of success. I think it's the way I trade, it's quite difficult using the Bollinger Bands. I know a lot of people are quite successful with the Bollinger Bands. It's just not really for me or the way I'm trading. Let's see if we do find another entry here. So that would be an entry with me on that one. And then obviously we're going to be trailing. And I think, oh, it's moving quite slowly here. Now it's lagging behind.
Is it?
Yeah, so I guess you're hitting that TP right there. So this is just a super small trade, which makes me believe that if it's going to continue like this, then it's just simply not going to be very profitable. But you never know. You never know. But then you do the whole process over again, right? You look at, okay, we have a bullish engulfing candle here. We have on the close of that candle, we have stochastics RSI in the right location here with a bull cross. But then on the MACD, you're trending to the downside, and you also have the histogram being bearish. Now, I think actually I've seen a lot of people use the Bollinger Bands on the 1 minute. I think maybe the MACD isn't really useful on the 1 minute, but it can be, and I've seen quite a lot of people actually use the Bollinger Bands on the 1 minute. I do have a script based on the Bollinger Bands giving signals on the 1 minute, and sometimes it can be quite successful. So I don't really think there's any time frame limitation to the Bollinger Bands. There might be to the MACD, but I don't think so. And you can also include the RSI. I don't really like using the RSI, especially not in low time frames. I think stochastic RSI is much better on the low time frames because stochastic RSI is reacting much more quicker than the stochastic RSI. Than the RSI. I think if I go through this live, it's going to be super, super boring. But just to give you an idea of what you should be doing, right? And if we just fill out, and I can show you. Let me open up TradingView here while I look up another template where I have quite a lot of data in it. Yes, I have one here. Here's one testing I've done. Now I haven't added any confluences here because I only tested very, let's see, no analysis behind this kind of thing. So what I'm doing here, I'm just demonstrating how the backtesting template works. It's what I did with the Bollinger Bands and indicator. It's not really me seriously developing a system. Now, if I would be developing a system, there would be very much clearer guidelines on what exactly an entry trigger is and what type of market structure I want to see and price action and all of that. So there is, of course, a lot of analysis behind each trade if I'm actually going to develop a system. So what I would do is I would most likely add horizontal levels and things like that. But let me show you what, the power of this backtesting template. So here we have 55 trades, and this is where I've tested on the daily and 4 hour. It's very simple. I look at daily levels, and when price hits those daily levels, I look at 4 hour double bottoms or 4 hour bottom formations, and then I exit at half an hour. So you see that all the winners here is half an hour profit. Some of the losers are smaller than 1 hour minus, but all the winners are just half an hour. And you can see that over 55 trades, we had a 76% win rate. But that's not the point. The point is what you can do with the information from the date and the time and the pair and the hour without the indicator conferences. We can go to trading sessions, and here in trading sessions, you can see which of your trading sessions are most profitable. You can look at your average R on different trading sessions, and here you can see, for example, that the Hong Kong session is the most profitable one, which is a shame because I'm sleeping at that time. The thing though is that it also incorporates the 4 hour candle closing at 7 in the morning on summertime, so that might be the case also. I know that a lot of trades I do open is, but look at the win rate. The win rate during this time is 90%. And the lowest win rate is on the London session for 64%. But Tokyo and Hong Kong is 81 and 90. Why is there a Hong Kong session though? I don't know. Anyway. And then you can look at the win rate as percentage. You can look at how many trades you had for different sessions. And then we can also look at the average R on the weekdays. You can look at here, for example, throughout the 55 trades, the average R for Mondays is unprofitable. Same for Sunday. I'm not sure why there's trades on Sunday because it's only in the Forex market, but it's probably because I've taken a few trades right when the market's opening on Sunday, but that's not profitable. And I would actually mark the Sundays as the same as Monday. So Monday, not profitable. And then you can also look at weeks of the year where you're not profitable, which is very interesting to see that 1, 2, 3, 4, 5, 6, 7 out of 40 weeks is not profitable. Then you can also look at the month. Which of the months are you profitable, and which of the month are you not profitable?
There's some value to that weekly analysis because you can see a pattern there, and that's important when you're doing backtesting. What you're trying to look for are patterns. Is something specific more profitable or not? Even if it's not, it's a pattern into unprofitability is something that you can use. You can either go against it, right, or you can skip it altogether, right, and keep the profits and skip the losing period, unprofitable periods, or whatever characteristic it is showing. But the weekly analysis is showing that week 19 to 26, that's summertime, right? If this is
Right.
if this is a data that you're getting, right, and the pattern here is summertime, there's something during summertime, and you have to of course compare this with other years to validate this seasonality, right? It's an assumed seasonality. If you have enough data and you can validate that indeed summer times are on average unprofitable or less profitable, you can use that to your advantage. You can skip it, as I said, or you can go against. You have a reverse signal. If it's very unprofitable, then you can measure this with your expectancy. If your expectancy is very negative, why not switch it and use the reverse signal? In practice, very almost never reverse signals work, but I mean, in theory it can work. I just don't know many examples that it's actually a thing. but you can, in any case, you can skip the signal on those years, on those periods, and just keep the profitable months or weeks in this case.
Yeah. Gold is really moving to the downside here. We got EU coming lower as well. And GBP/USD is not really breaking down, but it looks like it's ready to perhaps break down. Let's see what on AGJPY kind of like lagging behind here. But let's see what we get, guys. I've tried to set up the giveaway, but it doesn't. There's something wrong with Gleam that we use. It seems like I'm not able to copy the. What I do is I copy previous giveaways and change the name and everything, but there's something. It seems to be lagging behind quite a lot, but I'll try once more, see if it works. Let me see. Yeah, okay, so it does work. So guys, you have to be quick now. I'm gonna give you the link and I'm gonna give you the code, but I'm gonna initiate the giveaway quite quickly. So we're gonna try to end this at 4 my time, which is in 10 minutes. So within this 10 minutes, you'll have to put in the code and everything. So make sure that you're ready when I do give you the code here.
In the meantime, I can perhaps look at EU.
Yeah,
You think that's a good idea?
sure.
Okay, all right. I'm gonna put on my as you're doing the Gleam, the giveaway process. I'm going to put my screen on, and without going into great details, what we can see is that the market. Um, we have been we have visited this analysis. Of course, this is EU where we analyze this very often. We had a very promising reversal happening, and but all of that is in the past, right? We the market price action behavior of price has changed completely in the last couple of sessions. Everything has to do, of course, with the election. So there is a fundamental driver to this, right? When these things, even though I don't use the fundamental side of analysis for my signals, you can backtest this and you can see this, that if there's a fundamental driver, you can these moves tend to move much extended extended in period, but also in durability, if you will, and that's what we're seeing. We're seeing a complete change in market behavior. We have the reversal pattern. We're getting into that demand area on the daily. I'm going to take that out. Let me see. Let me show you on the charts. We have that reversal pattern on the quasi, on EU on daily, which is this pattern, right? Broken the neckline. That's the neckline right here. Actually, it's a little bit higher. It breaks it and comes back to all the way to the lower order block. So this is the last line of defense for a reversal. It feels like it's not going to hold, right? Because we have that election, we have some major moves in the market, dollar strength, very, very strong. So it looks like all of this is not going to hold and it's going to break down. But as traders, you need to make sure you don't follow your opinions, but the data, right? And if you've backtested quasis and generals, you'll see that they're you can build profitable system around them. So I will be taking longs in this area if everything lines up, right? We are in a daily order block, which is an entry order block on the quasi. If it gives me the signals on the H4 and the lower time frames, then for sure I will take it. But so far we don't see that. If you look at the daily, of course we don't have anything else. It is getting into that area. Let me zoom that in a little bit more so you guys can see we are in that entry area and there's nothing to do, and there's no signal possible in here. If you go to the H4, this is just complete bearishness, as bearish as it can get. So there's no signal here. If you keep on going lower, there's no buyers to be seen, right? As long as that's the case, then I have no interest in buying this. Even though this is a demand area on the daily, it needs to show me that it wants to reverse. It needs to make at least an attempt for me to start looking for an opportunity, and it's not doing that yet. I've gone to the lowest hourly time frame, and it's not showing anything interesting to be buying. So, and for a seller, of course, to me, I want to be selling this when it comes back to a area of supply, and I don't see anything here all the way back to, if you go to the H4, I don't see any order block here either. Maybe on the H2, well, there is that top that could be used for your supply zone, but it's on the H2, so it doesn't look very interesting. I would have wanted it for it to be on the H4 time frame, which is not the case. So I'm not gonna be able to get an entry signal based on what we're seeing right now. Maybe that can change, but that's not the case yet. I want to see how price does something like this and then make that reversal pattern visible for us. As long as it's not doing that, I wouldn't be touching it. That's on EU. How are we going with the giveaway link? I see you've posted it.
Yeah, the link is all set up. We got 100 people in right now. We got more people
Mhm.
watching though, so make sure that you go into the link. The link is in the pinned comment. It's also on the screen here. It's also in a pinned comment on YouTube. I know that there's probably a few of you who are not in the giveaway right now, so make sure that you go into the comment and click the link. I will be drawing a winner in about 4 minutes, so make sure that you're actually in the giveaway, when otherwise you're not going to be eligible for a win. Now that the market is moving so rapidly in my favor for the ideas that I have here, I think it's kind of gotta work on a. I didn't think that it was going to happen this quickly, So now I thought I was going to have more time to exit, but and I have to start making plans for because usually when I'm swing trading, I look for entries and stop loss, like, and then when I'm in the trade and I see that the idea is working out, that's when I start planning for an exit, because otherwise there's no point in me planning for an exit, taking profits, if the idea is not going to work out anyway. So I try not to put lots of focus on that. But now with EU, and especially with gold breaking down, I really need to start looking at uh, when is the ideas invalidated. What do I need to see in the market for what do I need to see in the market for these ideas to be invalidated. And right now I'm not really. I mean, if I pull up my screen here, now this is the relationship between the dollar currency index and S&P 500, and I don't see any signal of this relationship not working out. If I mean, that's a good way to put it. But and the dollar currency index has quite a big move to the upside before we reach that range highs. So I do think that, yeah, I mean, the most probable area for me to take profits is in this area. That low target. I mean, if the euro is going to drop down here, we're talking about a 560 pip move, which is like That's too big. That's too big. I mean, we might get multiple, but then you look at this move, right? You look at that move right there. How big was that? This is an 800 pip move. So
I think you want to take into consideration the fact that this is a major thing that just happened,
yeah,
right?
yeah,
We
yeah, yeah.
have we have a change in geopolitical assessment all over the place because Trump is completely different than previous. I mean, Biden was. Is going to be. I need to say, and that changes just about everything. So
Yeah.
I think that is that opens the door for possibilities for market to move, not as we have been expecting, but extraordinarily, whatever that may be.
Yeah, I think you're right. I think you're right.
Yeah, so I would say if you looking at previous price action last couple of years, if it hasn't done something that it looks to be, what it's telling you, like a great movement or a huge bigger than average movement, then it may be just as possible because of what we just mentioned.
Yeah, you could be right. Okay, so we're gonna be giving away one 20K bootcamp account today. So if you haven't signed up for the giveaway yet, you're too late, and you have to join tomorrow instead. Tomorrow, I'm gonna give you more time. I'm gonna be adding the link to the description, and tomorrow also we're gonna be talking about more about this, more about the outlook that I gave you guys. Here in the beginning of the stream, I'm also gonna give you. I'm gonna talk because now I've gave you my plans for what to do till the end of January. But tomorrow I want to focus on. So I want to do a sort of an experiment. I want to open a position with the goal of trying to catch a yearly move. Like what if we have a move throughout all of next year or throughout a majority of next year, and I want to see if I can capture a move based on analysis based on a monthly chart. See if we can have a perhaps catch a big cycle move. That's always interesting to work on that type of analysis at the end of a year and really prepare for the big picture move throughout next year. Okay, let's draw the winners here, or the winner, I should say. Paul B. There we go. Paul, nice.
Nice.
Congrats. I know you've been in this live stream quite a long time. I've seen you in the chat. What's up, Paul? Is it Paul Brown? I think it's Paul Brown. Let us know. Be known in the chat. You're awfully quiet. Maybe you're not here, but you should be. You're most likely here. I know that you're here.
Congratulations on that, Paul. I
Yep.
hope you make great use of this opportunity and come tell us when you are funded. Tell us how it went. And Paul Brown, yes.
Yes. Okay, guys. Thanks for joining here today, and guys, as well, let us know if you have any feedback on. And by the way, the giveaways that we did prior to the bootcamp week, we are working on that. We have sent out some links. Some of them worked, some of them didn't work. So we're working on that. We're setting that up for you guys. Thanks everyone for joining, and I hope to see you all tomorrow. We're going to be looking at more swing trading ideas. I'm going to have Alex tomorrow as well. Victor will not be joining us. We will have Alex here doing some live trading, and I'm going to be focused on swing trading, and Alex is always going to be focusing on the lower time frames. All right, no, Paul, we do not need your email. I already have the email. We'll be sending out a link to you. All right, guys, take care and see you guys tomorrow.
Thank you, guys. Bye bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.